That was quite a bounce back, and it's definitely something we like to see. But let's not get too far ahead of ourselves here. Yes, we had a very strong move today, but this is a much more uncertain time than it was, say, 2 months ago. Yet the market is significantly higher than it was 2 months ago, and we recouped all of yesterday's losses. So I don't really see a whole lot of reason for the market to rally in the next week or two. I just don't see any propellant for that. We've seen low rates and falling rates typically aid the market. We're not seeing that right now. And if anything, the move in rates is likely to the upside. I happen to believe that the mega cap tech stocks may pull back, and maybe that's instigated by a rise in the interest rate, which would be good for energy, but it wouldn't be good necessarily for the broader market. So we have to be somewhat cautious here. The more the market falls, the less cautious we have to be because prices are okay. But now that we're back close to Friday's level and at higher levels than yesterday, something to think about. I'm still very bullish energy. As I said yesterday, I think a lot of yesterday's move had to do with paper trading. And I'm not talking about paper hands, I'm talking about actual paper trading. So if you want to know a little bit more about that, go watch yesterday's video. We talk about that and cover that whole notion. But the market has had a swift rebound, and maybe we stay here and continue to rally. But I like Tom Lee's take that it's going to be a choppy month. This is the most uncertain we've been on a broad level with Delta in quite a long time. And I'm not in the camp that it's going to cause significant economic damage. I don't think that's the case. JP Morgan put a note out this morning about that. The United Kingdom took their lockdowns off. I think that's a very optimistic sign. So I don't think there's going to be a crazy move because of that, either in the economy or in the market. But it's uncertainty, and uncertainty leads to chop, not massive dips, to chop, to volatility. So we're going to see what happens. Yes, today's a good day. Let's not get too ahead of ourselves. That said, yes, I do continue to expect energy to run, but I'm not expecting this to be a one-day move or a one-week move. I'm expecting it to be a month, 2, 3 month long move that continues for some time. Now, one might think, okay, well, should we get a little bearish? And I've had clients in the past couple of days be concerned about the current market level and possible Delta variant affecting the market. The reason why I think we can stomach it so well is we've had several of these waves already in the past, and it hasn't caused anything serious in the market. No serious damage has been caused in the long term because we've pushed to new all-time highs and just continue to hit new all-time high, new all-time high. So I expect that to continue, especially now with vaccinations making the death rate much lower, with antivirals occurring to save and help people who do get it and are in critical condition. And I expect Fed posture to remain accommodative so long as there's a threat. So if there's any bad news, well, we go to the phrase of last summer, bad news is good news. So I expect the environment to remain all right. That said, some chop and shifting of the market can occur, but I don't advise you to play that. It's really hard to play that game. Look at yesterday. Sure, if you bought the dip, that was good, but I think very few people expected as strong of a rally today. So that just shows you how quickly things can change. Stick to the fundamentals. And if there's a big move in something, for example, energy, capitalize on that because that's where the opportunity is. And then don't play it day to day, play it week to week and month to month. But focus and listen and watch day to day and see if anything causes you to have to play around with your thesis. So that's the thinking right now. We'll see what happens. And until next time, peace out.